Good morning, everyone, and thank you for joining us on Morning Markets. Today, we'll look at a couple of contrasting economic data points from yesterday and also focus in on the Federal Reserve meeting today. So just looking at some of those economic data points from yesterday, very interesting to compare and contrast that from Europe and the US. We had an indication in Europe yesterday, certainly, of how the tremendous increases in interest rates that we've seen over the last 12 months are impacting loan demand, particularly loan demand from the corporate sector. ECB data yesterday showed us that demand for loans from corporates is contracting at a record pace within that survey, but also interesting to note that banks themselves are tightening their lending standards. And what do I mean by that? Really, they're increasing the scrutiny that they're giving to loans, but also thinking about the impact of funding costs on themselves. So in Europe, a little bit of a challenge from a loan perspective and a demand perspective. Contrasting that into the US and the data we had there, very much focused in on the consumer. We've talked about the strength of employment in the US and how that has fed into a very strong consumption or service-based environment in the US. That was very evident yesterday with a further improvement in consumer confidence, increasing from 110 to 117 in July. I should caution that survey-based evidence is difficult. Forecasts can have wide errors in them. And if we think about that, the consensus was really looking for just an improvement to 111. Nevertheless, it continues to illustrate that the US economy is proving to be more resilient at this point in the economic cycle. Just a couple of other things to touch on from yesterday. There's a number of personnel changes in China at the People's Bank of China and also within the Foreign Ministry. And I think that clearly continues to build on a little bit of momentum that we've seen over recent weeks, where there is an increasing concern within the Chinese leadership that we're not seeing the economy there respond in the same way as we would have expected as it's relaxed all of their COVID restrictions. And I think those two changes is certainly something for us to watch and to comment on, particularly as we see any policy announcements in coming days. We're also in the midst of reporting season at the moment. Continue to hear from many companies. I just call out contrasting fortunes last night for Alphabet, Google's parent company, and also Microsoft. Alphabet continuing to see strength in its search-related business. Contrast that with Microsoft, bit of a slowdown there in their cloud-based computing business. Again, something to continue to monitor over coming days as we hear from other companies. Turning then to the focal point for today, certainly very much about the Federal Reserve. Expectations being that we will see a 0.25 interest rate increase, taking us to 5.5%. The importance there is really going to be around the commentary and any discussion, as the market is really looking to assess whether this is the last interest rate increase in this cycle from the Federal Reserve. So certainly something that we'll comment on again tomorrow. I'll leave it there for today, but many thanks for joining us.